Good morning, guys. Welcome to this Tuesday, October 28th, and Halloween is on Friday. Then we have Thanksgiving and Christmas. So that's to stress you out. Anyway, the market is in a good mood. We overnight holding on to the gains. We gapped up um, into yesterday's trading. So far, they're holding on to the gains. They had a nice little pop late in the session yesterday. I didn't think that's going to be that they're going to be able to pop that, but they did. And late in the session, I think they could have been a tech earning come out on Nasdaq. I think Nasdaq was going off pretty good. So we had most likely some earnings report came out and do that last little pop, and we've been holding that gain so far. And we are up here against 6,900. So 7,000 is the next target up on the way up here. And I think the market it's has a good set of tailwinds behind it. There's still some hurdles ahead, and there's still more earnings to come. There's still the more deals to be done between China and the rest of the world. And we'll see what comes out to the meetings they have later in the week with the Chinese. So that comes out with a kind of a deal, stabilize that whole Chinese trade situation. That would be setting things off to the upside, I think, in a big way. So starting off again from the long side of the market, looking to buy weakness, looking to buy against the support area at 6900s, 68 90s, 68 80s, 68 65 to 70s for rotations up. We're pretty much looking to buy against weakness all the way down here to that gap, lower the gap or higher the gap if you look at it from this side of it, but it's a lower support area at 68, 65 to 70. So that comes out, they start taking that out. That's when I would look for potential retracement trade at that point. And that might happen sooner than later, but right now it doesn't look like the market is in the mood to test the gap. It looks like it's more looking forward at higher prices. But if we get some weakness, I would look to buy against those support areas, the 6900s, 6890s, 6880s down to the 6865 to 70s. And below that, the lower support area, if they start taking it out, start retracing, I would hop on a short trade pretty aggressively at that point. I will see if the only short we have in front of us really 69.15 here, but I would not be super aggressive on it. The only times I take shorts is really when you see the market extend to the upside, you're running into some sort of resistance as you can in the shorter term chart. That's when you can scalp it right now. But we are in a move out of the middle to the upside. We should trade it as such. There's no reason to step in front of this as and be aggressive on a short trade because once the market is repricing like this, you're most likely to get caught in it. As you can see, we are in the move out of the middle to the upside. We have this gap. That's going to be challenged at one point. If it's today or not, who knows? But we're going to be at this point, we are most likely looking at higher prices. But once we get a bad headline or some kind of concern in the market, you'll see most likely a gap test of this area. And when that comes, we can be ready for it. At this point, I mean, we are pretty much trading this from the long side of the market as we move out of the middle to the upside. And as you know, the rules, one of our rules, do not fade the mom and move out of the middle, and that's what we're not going to do. Doesn't mean you can't take short trades, just have to be a lot more deliberate about them and a lot more nimble, if you wish. If you're looking for a bigger trade, you're looking for a long go with type of a long kind of a not go with type of trade, but you're looking for getting long against the pullback and see how far they can take it on the upside. That would be the bigger type of trade you're looking for. So that's the ES to get started, looking at the bonds and the NASDAQ. Bond market is to the upside, so that means that we are yields coming down a little bit. So the little pullback we had is now right back up here against that upper edge at the 1910 to 16. And I'll say you watch that level, the 16 here, the 12 and the 16, you have like 16 to 18 and you have 12 to 14. These two support areas, sorry, resistance areas. If they come out, I would be a lot more aggressive on the long side because that now we are in territory where they're actually looking at extending to the upside. So market has been drifting up a long time. We stayed around that 113, 114. Yeah, long-term yields is slowly coming down. bond prices are slowly trading higher. And I would just stay on the long side of this. A range band primarily, I would say, and then with the buy favor the long side. And buying weakness would be the way to go right now against the 119s, the 118.25s. This edge here, I would love to put something on that edge right there. You see that 5-letter edge here? I have it a little bit lower. I can move that up a little bit. Let me do that. Let's do this. Just wanted to highlight this area here, that 5-letter edge. So you have the mode here from at the 1825s, and looking forward to buy against about 1820 level. That's the mode of Friday. So you're looking at this these two trading days right now, giving us a couple of support areas to lean against. But looking to buy against that, I would say below that 118.20, we're taking off any long bias and just going by flat out range bound. And on the way up, looking for potential short against that 1906, 1912 to 14, and 1916 to 18 for rotations down. About 16 to 18, I think the bulls have it. And at that point, I guess going to stay on the long side, but fairly tight range to stay on the bond market. The range hasn't been a huge, it's been like a point or less right now, which is not a whole lot, but it's a calm bond market is pretty good. It makes it a bit difficult to trade it, but you had to be the opportunities when they come. They come reasonably quick. It's super slow, feels like, but when the opportunity is there, it comes and goes pretty quickly. On the Nasdaq, though, that's the one which is on flat out fire. So that's the AI trade, moving us higher. So looking to buy weakness against the. Let's see if I can come find my capital flow on the Nasdaq real quick. Looks very much like the ES, very much like a big gap up and then some. So I'll move out of the middle to the upside on the Nasdaq in a major way. Nice gap up here, and I would just look at this as a potential area to be tested at one point, but not quite now. I think we may see. I mean, who knows? Who knows when you get a negative headline come out of nowhere, and they ran it hard down. But right now, I think the momentum is to the upside, traded as such. Do not fade the move aggressively. There's still shorts to be taken, but not super aggressively. Now, looking to buy weakness against that 940s, 900s, 840s down to the 800s, and I would probably say below 800s. Given the range we have on the Nasdaq, below 800s, I would be probably below that 850. I will take off the long buyers and go back range bound. Still looking to buy against those 800s, 760s, 700s. And not until they start taking out the 700s, really leaning on the short side. At that point, they'll be looking at the gap closure trade on that one. But there is a pretty good range. This is like 900 to 7, it's like a 700. So that's like a 300-point range. That's usually a pretty big day on the Nasdaq. But yesterday, as you can tell, was like a relentless move to the upside. It wasn't straight up. It was a few different things. And I remember I had a short trade yesterday, nice short trade. But you can get those on retests, but you have to be really nimble about them. It's getting trade location on the pullback is a little bit more difficult. But if you try to be patient and wait for them to get to an edge, that would be the better way to go. But I know it's kind of tough to do that. So sometimes it's just difficult to get in on the pullback because you don't know quite how far they're going to pull back. So you have to be leaning against one of those edges is kind of the best you can do at that point. It definitely looks like they're trying to try to take it higher. So there you have it. And then finally, oil and gold. And here you have an interesting one. First, let's get oil out of the way because nothing is happening on oil. Well, a little bit is happening. They're pulling back a little bit. Oil is back down here, testing these lows at the 59, at the 60s. So 60.15 and then 59.75. They're back up again, but they are back down here, looking at challenging these these lows. They are reverse retesting that support area right now. And if that comes out, we are going to be right back down again. So I'm going to fold that together like that. So you see, they start to move out of the middle to the downside here. And this whole thing could turn into a nice distribution. But right now, I'm going to look for a buying opportunity against that support area at the 59 and 80 and the to the 60s. And if that holds, potentially stay on the long side and see if they can take this back up again. And if not, if they take out these two support areas, the 60-10 and the 59-80s, and we are heading right back down again, and that could take us lower. Now, they're going to probably try to drive oil prices even lower than that. So it's going to be some pain for the oil companies, because the lower the prices go, the harder it is for them to make money, and then they slow down production, and then that in turn raises the prices. So that's the oil equation. But I think you're probably going to see something good happening going in. As they put pressure on Russia, the idea is to drive oil prices down and starve them of cash. But that is kind of the playbook there. Now, I would say, yeah, so I would look for shorts right now against the 60-70s, 61s, 61-30s for rotations down so you can retest these lows. And I would look for buying opportunities against the 60-10s and 59-80s for rotations up. Above the London low, staying on the long side at that point, start leaning in on the long side, and below that 59-80s, start leaning in on the short side on oil. Now, gold, that was the one that was like, they caught my eye this morning. Like, man, this guy is absolutely falling apart. Melting down, pardon the pun, right? So gold is, again, had to look at this from an F1 perspective. So we were up here. Remember, we were popping all the way up here in the 4,400 range, and then we were down a couple of days all the way down to that 4,100 to 4,000 range for a little bit. And they took out the 4,000s yesterday. And in J period, you can see how in J, and you can see how they took out the 3960s. They clipped this whole low volume area, and they're right down, and they probed reverse retest the 3900, and now they bounced off that. But man, that is a heck of a move to the downside. So another $100 to the downside. So I remember we used to have gold traded like a few bucks a day, or like up to like $5. That was a big range. Now they're looking at $100 a trading day, like 10 times the volatility. That's pretty crazy. But this big low volume area is important because they just retraced all those single prints. They tell reverse retest 3900. So this could be a bottom. This could be a nice support area to lean against. I would not be aggressively buying it just yet. There is no reason to. It's going to be, if it stalls, you're probably going to get another retest holding here before you have to aggressively commit to a trade. But man, I would stay on the short side on oil right now, or sorry, on gold right now, and see how far they can take it. But it is pretty freaking, it's pretty volatile. So initially looking to sell strength against the 3950s, 3965s, 3980s, 78 to 80s, 3985s for rotations down. If they start trading up above these two resistance areas, the low of yesterday, 3987, and the 3978, these two resistance areas, they start taking those out, I would be a lot more aggressive on the long side at that point. Could be like the flush, and this is the last hurrah, but right now we are right in that middle of that low volume area. So I had to kind of get up above it and then some. And it starts retracing it past these two resistance areas. I think we are back on the long side again, at least in the short term. But man, this looks pretty ugly. And as I said, I'm not going to try to trade it unless I get a really good opportunity. Now gold can tend to be, I mean, you can see here, you get the reasonable edges, but they're still pretty big. So even that high, 43 up to $2, that's okay. That's doable. Up to about that rotation, now we at $5. So it's even these little baby moves are like almost the size of my stop move. So that just tells you that it's something you don't want to trade unless you have a really good setup and you want to take the shot. Just be prepared to trade with a bigger stop, and you have to. All right, so that's oil and gold. Also, we had the Fed meeting begins today. From what I hear, they're going to be announcement tomorrow, so we're going to see if we get a rate cut or not. But that's going to happen tomorrow afternoon. So we have a Fed announcement tomorrow afternoon to look forward to. All right, guys. So staying on the long side, look that we just popped and made new highs. There you go. So good trading, guys. I'm gonna wrap it here. Good trading, and I'll see you back at 11:30 for the next update. All right, guys, later.